Welcome to your April 2026 market update. And this month, there is a lot to talk about. For reference, this is being recorded on April 7th because as we've seen, this market can shift every single day. We've got a housing market here in Greater Phoenix that is still moving. We've got sellers in many areas holding more leverage than you might expect. And we've got the broader economy throwing us some curveballs at all of us at exactly the same time. So let's break it down. First, I want to say this clearly. I am not interested in turning this into some political commentary below, but I also can't ignore the fact that the geopolitical tensions right now, especially involving Iran and the Middle East, is affecting the financial markets in a very real way. Oil prices have moved up. Stocks have been under pressure. Treasury yields have been volatile, to say the best, and mortgage rates have reacted to all of it. As of Freddie Mac's latest weekly survey, the average 30-year fixed mortgage rate as of today is at 6.46%. That's up from 6.38 the week before and nearly a half point since the start of the conflict in Iran. So yes, after briefly feeling like rates were calming down earlier this year, we've seen them move back up. And that matters because rates are still one of the biggest drivers of buyer psychology. Not the only thing, but definitely one of the biggest things. Now, here locally, the interesting part is that the market, it's not rolled over. According to the latest Cromford snapshot, active listings are right around 29,942, with 25,805 of those excluding under contract statuses. And sales per month are running around 7,500, and the overall Cromford Market Index sits at 83.2. Remember, if you've been watching for a while, the Cromford Market Index, anything under a 90 means it's a buyer's favored market, meaning declining prices, more concessions, those sorts of things. Anything between a 90 and a 110 would be considered a balanced market, no favor either way. And anything over 110 starts to drift into seller favored markets, meaning price increases, more offers on each home, the sellers maintain a little bit more control. This 83.2 means overall, we're still in a buyer market territory by the index, but it is not some dramatic collapse. It is so much more nuanced than that. In fact, when you zoom in by city, the picture changes fast. Chandler is at the top of the list with a Cromford market of 154.5, Fountain Hills at 146, Tempe is at 128.5, Gilbert is at 123.4, and Mesa sitting right at balanced. While the outer markets like Santan and Queen Creek sit strongly in a buyer market favored territory. So while the headline for the region might say one thing, the reality on the ground is that a lot of East Valley and a core of the Phoenix areas are still functioning much more like a okay seller's market than a buyer's market. And that's exactly why local context matters. Now, let's talk about March data and the closing data that we have from Maricopa County, because I think that tells a very important story. There were 7,268 closed transactions in March. Now that's up 2% from March of last year, but hold tight, that's not a real number. And it's up 28% from February. Resales were the stronger story. There were about 6,022 resale closings, up 7% year over year and up 30% from February. New homes, though, were much weaker. There were 1,246 closed new homes, which is down 17% from March of last year. Here's why I say it's not a real number. If you adjust for the extra working day that we had in March, the story gets clearer. Overall, closings per day were actually down slightly year over year, and new home closings per day were down sharply. The resale market is holding up right now better than new construction. And that's worth paying attention to because for a while, builders had a huge edge. They were winning with rate buydowns, incentives, and affordability tools. But this data suggests that resale homes are competing much more effectively again, even in a choppier rate environment. On prices, the story is steady but not spectacular. The overall median sales price in Maricopa County in the month of March was $481,370. That's down about 1.8% from March of 2025, but up 0.5% from February. New home median prices came in at around $512,062, down 4.5% year over year, and resale median price came in at $470, down 1.1% year over year, but up a little bit, almost 1% month over month. So, what does that tell us? It tells us that prices are not exploding higher, but they're also not falling apart. This is a market that is still finding equilibrium wherever that may be. And one of the biggest reasons is the top end continues to outperform. The luxury market is still doing luxury market things. The upper end of the market is vastly outperforming the rest of the market, both in transaction volume and pricing. And at the same time, the broader market data shows that over 52% of all transactions that closed in March involved seller concessions. So a lot of things can be true at once. Luxury can be hot, certain cities can be strong, and the average buyer can still be negotiating for repairs, credits, or closing cost help. That's why broad headlines can be so misleading. Now let's go back to rates for a moment, because I think that's what most people are watching. Mortgage applications fell 10.4% in the latest MBA weekly survey. That tells you that buyers are sensitive, very sensitive. But here's the part I think that's important. Sensitivity doesn't mean disappearance. Even with rates pushing higher again, Cromford shows that total under contract activity is up 6.6% year over year. That means deals are still getting written. People are still buying and people are still selling. Life still is happening. They're just doing it in a market where the monthly payment matters a lot more. Negotiations matter a lot more. And strategy matters a lot more. And that's really the theme of this spring market. There's not panic and there's not euphoria. It's just strategy. So what's my read as I sit here on April the 7th? I think that this market is more resilient than the headlines want to give it credit for. I think higher rates are creating hesitation, but not paralysis. I think resale homes are holding up better than new construction right now. And I think that many of our core cities are stronger than the regional averages might suggest. And I think buyers and sellers both need to understand that this is not a market for guessing. It's a market for being informed. If you're a buyer, don't assume that every seller's desperate. Some are, but many are not. And in places like Chandler, Tempe, Gilbert, Scottsdale, and even in Mesa, good homes that are priced right can still move fast. Now, if you're a seller, don't assume that the market's going to do the work for you. Concessions are common. Pricing matters. Presentation matters. And your strategy absolutely matters. And if you're watching the news and you're feeling a little whiplash right now, you're not alone. The macro picture, it's super noisy. But the local market is still giving us signals. And when you pay attention to the actual data, the path gets a lot clearer. That's where we come in. Our job is to help you cut through the noise, understand your options, and make smart decisions based on your goals, not just the latest headline. So if you're thinking about making a move this spring, let's talk strategy.